Hey everybody, it's KJ. Thank you so much for being here. Man, I can't tell you how excited I am to have today's show. Today's show is one of the ones I've been promising you guys for months because I told you I got some badass friends. Well, today I'm delivering on my promise to help you, give you a chance to meet some of my badass friends. Today we are meeting with Jim Greaves with Hub International. Now, you guys might not have ever heard of Hub International, but they are an international insurance brokerage conglomerate. I'm going to let Jim tell you more about the company. But why are we doing this podcast and why is it so important for you guys? Is because today's the day we're going to get into the nitty gritty. This podcast is so important that I'm going to encourage you to pause it occasionally, get your notepad out and start taking notes, because when we're done today, you're going to have a complete and thorough understanding of the things that are important to you if you're going to be in business from an insurance perspective. So let me get off by starting and saying hi to my new friend, Jim Greaves. Jim, tell me a little bit about your background and about Hub International.
Okay. Jim Greaves. I've been doing safety and risk management in the state of Texas for 37 years. I started out of school in 1987, kind of fell into it, when the oil market had tanked, and took a job and thought, this will last me a couple of years until I find something else. And lo and behold, 37 years later, here I am still doing this. Very passionate about what I do, and I enjoy working with Hub International. We are the 5th largest broker in the world. We have 480 offices throughout North America and Canada. We have 100 risk professionals like myself throughout North America and Canada. And what we try to do is help our clients manage and what matters to them most, which is basically protecting their people, their property, and their profitability.
Now, Jim, one of the things that I need to tell our audience about is that I have the misfortune or good fortune to have been an insurance broker once in my life. I have my property and casualty license, and I also have my life and disability. And one of the challenges that I've had in putting this particular podcast together was finding the perfect pairing between knowledge and risk assessment and risk management. That's why I was so excited when my buddy Chris Galvan, a friend of yours, referred us. And what I want to talk about real quick is the difference between an insurance salesperson and a risk professional such as yourself. So let's clear the air, because you're not a peddler. You don't sell insurance, right? So what exactly is your role within the brokerage?
So basically what I try to do is I try to help their clients manage the risk, so that we have salespeople within our organization and they place the insurance with appropriate insurance carriers. And then we go in and we kind of help our clients identify what risks they have and then help them kind of manage those risks. And it could be operational risk, it could be policies and procedures, it could be responding to a catastrophic incident, because what we try to do is, again, protect what matters to the client the most.
So our clients are primarily field service mechanics, shop owners. We also have some sales professionals and body companies, and everybody's affiliated with the service truck, hence the name Service Truck USA. Now, one of the things that I wanted to get accomplished today is I wanted to get some definitions of some key terms, and then I wanted you to help these guys understand what is important when it comes to insurance. So first of all, let's start off by defining what is insurance in a broad sense. What is insurance? Why does it exist, and why is it important?
Insurance in its simplest terms, basically you're exchanging a small amount of premium to buy coverage to protect your home, your car, your auto, your business. So when you sit there and you think about just a simple auto policy that you may buy, maybe it's $3,000 a year, for your for your personal auto. But if you get into an accident, they're providing up to, $100,000, $300,000, $100,000 worth of coverage, or maybe the state MIMS, because otherwise that they're providing you financial security that would actually come in and protect you, your home, your business, and your organization from lawsuits.
Now, back in the day when I used to sell insurance, we called it mitigating risk and balancing the dollars in and the dollars out. We're trying to keep that balance because you can be what's called insurance poor, right?
That is correct.
You can buy so much insurance that you can't afford life and your business suffers. And we don't want our customers to do, or our members to do that. So the first thing I want to do is I want to help them understand the different types of insurance policies that a typical small business owner that's in the business of repairing heavy equipment or repairing trucks, they work in the field. Let's define some of the key types of insurance there are. So the first one I understand is called general liability. And that's the type of insurance that covers the business in whole, right? So how would you more specifically define that for me, Jim? How would they understand what a general liability policy is?
General liability policy is basically a policy that protects the organizations from actions performed by the employees. And it's towards the general public or somebody you're providing services for. It's not covering workers' comp claims. It's not covering, contractual liability, because sometimes there's an exclusion on that, which could be brought back in under an endorsement, not try to get too far into the weeds. But basically, it's if somebody, you got a service truck and something falls off the back of your truck and hits somebody else's vehicle, could be covered under your auto liability, or it could be excluded under that and picked up under your general liability policy.
Okay, so let's talk about that, because we're going to keep touching on this multiple times throughout our little talk today, and that is exclusions, limitations of a policy. So you got this general liability policy, and it covers John Smith Heavy Equipment or Ken Johnson Heavy Equipment, and it covers the acts of myself or my employees that affect the public and the customers. Is that correct?
That is correct.
Okay. Now, that doesn't necessarily cover you for a moving vehicle, right?
That is correct.
Okay. So one of the areas that I think that some of my guys sometimes get around and trying to kind of save money is this. Can you tell me what is the potential repercussions for a guy that has his F-350 service truck covered under a personal lines policy, let's say with State Farm or Farmers or Geico, and he puts it into his personal name. He buys a general liability policy under his business name, and he's involved in something falls off his truck in your example, or somebody gets in a bracket breaks and falls on somebody's hands, and it involves the vehicle. Tell me, what are some of the nuances that could affect a claim in that situation when he's using his personal lines insurance policy to basically circumvent commercial auto? How would that affect the claim potentially?
Okay, there's several factors here, and if I get too far into the weeds, stop me on this. So one of the main things is when you look at a personal auto policy, there's usually an exclusion for business operations. So if they get into an accident or it causes liability to another individual or person, the insurance company could potentially deny the claim because they said you didn't disclose that you're using this for business purposes.
I can't emphasize that enough. Just because you have an insurance policy doesn't mean that it's going to provide the coverage that you think it's going to provide because you didn't read the fine print.
That's correct.
So one of the things that I see happen all the times is a guy will, because he can pay less for the premium, and he thinks he's insuring because it says F-350, it's got the VIN number, he's got the price and all the lien holder information, but then he gets involved in an accident or he has a claim, and then the adjuster, I think that's what the adjuster is called, the adjuster comes out and he looks at the policy and he says, well, this isn't for Kenny Johnson, this is for KJ Heavy Equipment Repair.
Right.
We didn't insure KJ Heavy Equipment Repair, we insure Kenny Johnson. I'm sorry, but there's no coverage.
Right. Yeah, they would sit there and say no coverage is afforded. So when you look at a policy and when you fill out all that lovely paperwork, usually you see at the bottom any misrepresentation on this application will nullify coverage.
Basically, it's a get out of jail free card for the insurance company so they don't pay the claim.
Oh, no, sort of, kind of. It's a little bit more towards keeping people from trying to
game the system.
To game the system. I mean, that's a perfect example of that. The other thing is having a personal auto liability policy, through State Farm, Allstate, Farmers, or whomever. You may not meet the definitions and the requirements for the insurance if the vehicle requires a CDL driver.
Now, so many of my guys understand the CDL issue because, it's something you're trying to avoid. They're trying to avoid DOT registration. But the mere fact that the vehicle is used in the course of business, if it's not properly disclosed to the agent, means that you could have a policy that you're paying all that money for that doesn't afford you any protection.
That is correct.
Okay. So now let's jump up and talk about a properly insured vehicle. Insured, the company is the insurance company, is everything is proper. Now let's talk about the nuances of what commercial auto policies are as it compares to the general liability insurance. So exactly what is commercial auto insurance and why is it so important?
Commercial auto insurance provides a lot. It's like a 800-pound gorilla insurance policy, and what it does there is it affords you additional indemnification to mitigate claims. So on a personal auto policy, you may not have pollution coverage if you rupture a tank, but on a commercial auto policy, you may have some, spill cleanup that would be covered under that. So usually most commercial general liability, auto liability policies would have a $1 million limit per accident, so that they're giving you $1 million. So if you get into an accident, and unfortunately we live in a litigious society nowadays, that, oh, hey, it had, Kenny's truck service on there, they're going to sue. They're going to contact an attorney, and then the attorney is going to run up, potential medical bills and other issues like that to try to get as much money out of the insurance company. So, having that, it's really key. And one of the other things that's really is critical on an insurance policy is to name any additional DBAs that you may be doing work under. And a lot of times when you do that is saying, hey, we're doing business as this, or they're an additional insured, helps protect you as an individual and the organization, especially if you're not incorporated.
Okay, so let's recap that, and let me explain why that's important. It's not uncommon for you guys to have little side hustles, for you guys to be in business, and you'll take on some additional responsibility that's above and beyond your core competency. It is critical that if you represent yourselves to the public under that name, that name be named on the policy.
That is correct.
To match. Because again, what good is the piece of paper that you're buying if it doesn't fulfill the claim? So I'm going to tell you a little side story. I am old, and I've managed not to crash into anything, right? So I rented a U-Haul and a 26-foot box truck, and I unloaded it, and I was proud, and I returned it to the facility that I rented here in San Antonio, and they happen to operate a gas station. So I get the gas, I put it back to the proper level, and as I'm turning around the gas pump, I hear this great big old giant crunch, and I clipped the right rear fender, and on this F650, the stupid axle fell off. I mean, it was completely shut down, just dead in the water. And I go, you got to be kidding me. I've never crashed anything in my life. But I bought the insurance policy.
Right.
I said the risk versus reward was that, it's $45 for the, this wonderful plan, and I bought it. Man, I tell you what, that was the best feeling I've had. I didn't even have to sign anything. They just gave me my receipt and said, have a nice day. And that was probably a $6,000 to $7,000, $8,000 repair. So that is what proper insurance will do for you, right?
Right. And when you talk about that, is a lot of people don't forget that if you cause damage to somebody else's vehicle that they use in their business, and that vehicle's down, and it generates revenue for that company, you're liable for that loss of revenue. So you're sitting there thinking, okay, hey, it's only, $2,500 worth of damage to this vehicle, but let's go back a couple of years with a supply chain issue, and there was a shortage on parts, and there was that backlog. That vehicle could have sat there for
a month or 2 months even.
Yeah. And if that thing was generating $10,000 in revenue for that organization, that is included into the potential loss.
Okay. So another next area that I want to cover is a lot of my members, a lot of these guys and gals that are part of our group don't know what Garage Keepers insurance is. Can you tell us what Garage Keepers insurance is and why that's kind of important?
Oh, yeah. The official term now is Garage Keepers Legal Liability, at least in Texas. And basically what it does is it provides liability coverage to a vehicle that's in your care, custody, and control. So if the vehicle is at your shop and somebody breaks in and steals it and goes for a joyride, your general liability policy is not going to cover it. Your Garage Keepers Legal is.
Now, is Garage Keeper standard in commercial auto policy?
No, it's a separate standalone policy.
Jim, you're telling me that the guy's got to buy the coverage? He's got to remember to ask his broker to give him that type of insurance? Otherwise, he could be...
Yeah, unfortunately, yes.
Okay, so that's your first takeaway. Stop the tape. Go get a notepad and write down, do I have Garage Keepers? Why should you have Garage Keepers? If you are operating your customer's equipment, while it's under your care, custody, control, you are responsible for the damage that it causes and any resulting claims unless you have a very airtight legal waiver that indemnifies you.
Right. And that's one of the things is the attorneys are finding ways to actually go in and beat up and poke holes in these, waivers. I haven't seen a waiver that has been airtight in a long time, unfortunately.
So here's the thing, guys. This topic is so important because you didn't bust your tail to leave your dealer, to start your own company, to build it up so that you could hand everything you ever made and all your future earnings to some doofus in some law office. Okay, so now we're going to cover another area. So Garage Keeper is super, super important coverage. Okay, another area that I think is often overlooked is products and completed operations. So,
wow.
I know, Joe. I told you I have the misfortune of actually having done this once or twice in my life. Can you tell our audience what is products and completed operations coverage?
Yeah, so think about this, like completed operations would cover the work that you performed. So if you rebuilt an engine, you replaced a transmission, there's coverage for that. Sometimes that can be an add-on to a Garage Keepers Legal, or it can be an add-on to a general liability policy. So if there was any, faulty part that was put in, or the part wasn't manufactured properly, then, your insurance company is going to step up, pay for that claim to that individual's or that organization's vehicle. And then if there was a manufacturing process or defect, then they're going to go back against, say, Ford or Chevy or whomever manufactured that parts. Just think about how many product recalls that we see, throughout the year. So that kind of helps with that coverage. So you've got the, if you're rebuilding an engine and you blow an engine, you've got Garage Keepers Legal because you caused damage, or the damage was caused while it was in your care, custody, and control.
Let's do something simple. Let's just tell me how this would be covered. Your technician that's working for you fails to put oil back in the engine. Pretty dumb, but it happens.
It happens more frequently than you think.
Where would that be covered under the policy? What type of policy would provide coverage for you as the business owner in that situation?
So looking at that, if you have a technician that's maybe doing an oil change and doesn't put the oil in the vehicle, you're probably going to be covered under Garage Keepers Legal under that, because the vehicle was in your care, custody, and control, and it's providing coverage under that aspect of it. Now, not to get too far in splitting hairs, so you had an errors and omissions that was created by the action of an employee. So there could be potential coverage under a commercial general liability policy.
Okay, so let's recap, because I told you guys this is so important that it's really important that you take the time to write these notes so that you can have an informed conversation with your insurance agent or broker. Okay, so we just talked about products and completed operations. It could be an endorsement on your garage keeper's policy. It might be available as a standalone policy, and theoretically, it could be available on your general liability policy, depending on that particular carrier. But you need to know whether you have it or not.
That is correct.
Now, there's another area that Jim just touched on, and that's called errors and omissions insurance, okay? And that's professional liability.
Right.
And that has to do with your competency as a professional, right?
That's correct.
Your technician didn't intentionally not put oil in the vehicle. So, but a professional mechanic technician should have put oil, so that might be covered under that errors and omissions insurance. Okay, so these are 3 areas that you need to document in your policy. Take a highlighter and highlight it to make sure that you understand the coverage. So let's talk about another area that is often overlooked. Go ahead.
So can I add something to this? So what's really important is to get an understanding of the language that's actually in your policy. So if it's ambiguous or you don't understand it, because a lot of times it's written by a legal professional and, it's a lot of legal mumbo jumbo, is ask for an interpretation by your agent. So
verbal or written?
Written.
Okay.
And the reason you want to do that is then they may go back to the insurance company, say the underwriter at, say, Hartford or Zurich, saying, hey, under this scenario, is this covered? And if the underwriter goes, yes, the intent of this policy is to show that it's covered. The adjuster that's handling the claim may actually come in and say, hey, this is not a covered. Then you have it in writing from the underwriter saying, hey, this would be a covered peril, and then that helps.
Okay, so guys, here's the deal. I have the misfortune of having done this for a living for a little bit, so some of these terms that Jim and I are going to throw back and forth I know them, but I'm going to stop occasionally to help you guys understand. So what's a peril, Jim?
What's a peril? A peril is usually something that the insurance company is insuring against. So they're insuring against a fire, a flood, and then when you talk about flood, it depends on what coverage that you're doing. So if your auto gets flooded, it's covered. If your home gets flooded and you don't have flood insurance, it's not covered.
Unless
you have a flood policy.
Or from an apparatus, a sudden and accidental save. Remember these definitions? Yeah. A sudden and accidental discharge from a plumbing or heating apparatus. Okay?
Right.
That might be covered under the policy.
Right. But rising water from a river overflowing or flash flooding from torrential rains is usually not covered under a homeowner's policy.
Or how about this one? How about a city sewer backing up into your house?
Well, a lot of times that may be covered because it's an accidental discharge, like KJ was saying. It's like, hey, okay, this is an accidental discharge from a sewer, so those would be covered under those scenarios. But again, it all is dependent upon the policies. Insurance companies will have standard policies, they'll have scaled down policies, and then they'll have these enhancements. So there could be some things that we're talking about in generalities that may or may not be covered. Depending on which policy you actually have.
Okay, so here's an area that I think that a lot of guys either are unaware or ill-informed about, and that I want to talk about, and that is tail coverage. I think it's called tails, but I'm not sure the exact term. I forgot. But so as you purchase a policy and it has an effective date of June 1, 2024, it typically runs for a 1-year period, assuming that the premiums are paid in a timely fashion, and all that's good, checks don't bounce, and then it expires.
That is correct.
Okay, but sometimes what you did could happen during that policy period, but it doesn't manifest itself until another policy period. So if you're with the same company, you're probably okay, right?
Right.
But if you're shopping and you go with another brokerage, another insurance firm, what should these guys be aware of in that situation?
So a lot of that is going to be dependent upon which policy you buy. So you have an occurrence-based policy, which is good, because at that point, you no matter when that claim occurs or when it manifests itself, it would be covered. Now, if you have a claims-made policy, it is usually limited to what KJ was talking about, that policy period plus another 3 months, usually afterwards, where there would be coverage afforded, but that claim has to be reported within that time frame. And if it's not reported in that time frame, potentially there's not coverage unless you buy tail coverage, which is he's alluding to.
Okay, so let's recap what we're talking about. Again, stop the tape, put this in your notebook so that you can have a meaningful discussion with your brokerage, okay? There are basically two types of policies that you can purchase for your business. One is called an occurrence policy, and the other one is called a claims-made policy. It is critical that you understand which policy you're purchasing. With a claims-made policy, you also have to purchase a rider, and that covers the additional time for that claim to have been presented to you, okay? Because if it's not made within the policy period on a claims-made policy, even though it would have been covered, it's excluded, okay? So does everybody understand that? What do you have? Do you have an occurrence policy or do you have a claims-made policy? If you purchased a claims-made policy, did you purchase additional years
Right.
coverage? Okay?
Right.
Everybody got that?
So one of the other things that when you purchase a what they call TAL policy or anything like that, they will require you to sign a no known loss letter, that you're not aware of any losses that are occurring. So you could sign that letter today and then tomorrow you're made aware. Well, you didn't falsify any information because you were not made aware of that at that time.
So keep in mind, guys, insurance companies didn't get to be giant insurance companies and building edifices that are 4,000 feet tall by being silly, okay? They're pretty smart folks, and they employ some incredibly talented people and some really good lawyers. And they're not going to pay a claim that they're not legally obligated. There's no moral obligation on the part of the insurance company. They're going to follow the letter of the law, and they're going to follow the terms that were negotiated. So did you guys pay attention when Jim gave you that badass piece of information? If you're not sure of the language of the policy, then you send a request back to your agent, your broker,
Right.
and you ask for an interpretation. Stop the tape, write this down. Interpretation. You present a scenario,
Right.
you write it down. What if this happened? Would I be covered? They'll submit it to the underwriter. Now, I'm going to pause for a second because a lot of y'all don't know what an underwriter is, okay? So let's talk about what an underwriter is. Jim, love-hate relationship with underwriters, right? Sometimes I wanted to punch them in the nose, and sometimes I love them. They're the greatest people on earth.
Right.
What's an underwriter?
So an underwriter, basically what they do, the term is called underwriting, but what they're doing is they're taking the information on the application, they're looking at your previous loss history, and they are determining, what coverage and what the cost of that coverage is going to be for that. So they're the ones that they know the policies they're selling, and they're coming in and, they're looking at your years of experience. They're looking at previous loss history. They're looking at, how large of an organization is, what's your radius of operation? Are you crossing state lines? Because if you're crossing state lines, then at this point, you're getting into interstate commerce, and then you're having to get into, depending on the weight of your vehicle, then you're getting into some filings with Federal Motor Carrier Safety Administration. So all of that goes into determining what policy is correct for the organization, and then also what the premiums are going to be.
Okay, so you guys, here's the importance. I'm going to now give you another tidbit of Service Trucks USA super info, okay? This is really critical. You want to save money on your insurance? Keep good books, keep good notes, keep good financial records, and define your business clearly, because sometimes getting insurance can be something as simple as presenting a package to an underwriter that gives them that
That warm and fuzzy feeling.
warm and fuzzy feeling. if you make it difficult for the agent to submit this, and this is how the whole thing works. The agent isn't really the person who's making the decision on whether or not you get insurance, and he or she is not determining the cost of that insurance.
That's correct.
That's determined by the underwriter. So think of the underwriter as the offensive line for an SEC football team, okay? They're the defense of the insurance company. Their job is to protect the company, okay? And they're not letting anything happen. So you can't generally get past the underwriter. And if it's kind of a 50-50, they're going to side against you.
Well, actually, in the state of Texas, and I'm going to use Texas law. Okay. So if there is a tie where coverage, the determination is like, okay, is there coverage or is there not? And that 50-50 scenario in the state of Texas, the tie goes to the policyholder.
Okay, that's good to know.
By Texas Department of Insurance Law.
That's claimed.
That's a claim.
Okay, but we're still talking about whether or not you get insurance at all.
Right.
Because in a tightening market, insurance becomes a commodity that you want to protect. Am I correct?
Oh, that's correct. And I mean, we all see these billboards driving down the roads, and there's, I've got some friends that are attorneys, but you see these people and you're seeing these nuclear verdicts. You're seeing 10, 15, 50, $100 million verdicts. And a lot of times the insurance company or that client may actually have that coverage, but if not, that's a judgment that's going against that organization, and they're going to have to pay that out either through an annuity or have what we call a fire sale, having to sell some assets and resources to come up with that money, or they put a lien on their business. And one of the other things I'd like to add is when you're submitting information, obviously you're talking about service trucks. You have people that are driving motor vehicles. So there's what's called an MVR, Motor Vehicle Record Report. It is critical that you run these every year on your drivers. And the reason for that is you could sit there and say, well, hey, this guy had an accident, but it happened in his personal vehicle. It doesn't matter. That is going to come into the equation if the individual is involved in a motor vehicle accident.
Okay, so now we're going to do a Kennyism. I'm going to describe a situation, and I know it happens every single day, but now I've got an insurance person with me. So now it's no longer a Kennyism, it's going to be a Jimism, okay? So here's the scenario. Jim, I got a guy that is running a F550. It's got a 19,500 pound gross vehicle weight rating. It's got a service body, it's got a crane, it's got tools, it's got a welder, compressor, and all of that's going to be going down the road. And the truck scales at the time of the loss at 22,000 pounds.
Oh.
The guy was involved in the accident, and he may or may not have been at fault. Okay? Does that concern you as an insurance professional?
It could. And the reason for that is a gross vehicle weight rating is what the manufacturer of that vehicle says that it can safely operate. And if you exceed that, then they're potentially coming in saying, okay, the safety systems on that vehicle may not operate properly. And that could be a contributing or could have been a contributing factor in the incident. So then at that point, then the liability shifts to the individual who overloaded the vehicle potentially. So there is a concern with overloading a vehicle against its gross vehicle weight. And we've seen them all travel down the road. You see this, pickup truck that, is squatting because they have more than a half a ton in a half-ton pickup.
Right. Now, the area that I've told people for years, but now I wanted to get your opinion on is the concept of negligent entrustment. So you mentioned the importance of running an annual MVR for all of your vehicle operators and make it as a standard practice because you are trying to protect your business, right? Your livelihood. Now, what happens when a company knowingly lets their people operate vehicles exceeding the gross vehicle weight rating of the vehicle? So this is the company itself. So the foreman, the shop foreman who should know better, sees his vehicle, his mechanic operating a vehicle that far exceeds the weight rating of the vehicle. is there potential liability for the company in that scenario? Should they be involved in an accident?
Yeah, that is almost a perfect example of negligent entrustment. So when you look at a negligent entrustment, you're looking at an allegation or a tort against the employer or the organization, and they said they should have known that there was a trend or there was a unsafe action performed by that individual. Now, a lot of times you see this through people looking at MVRs. So I'd like to divulge a little bit more into this with your permission. Is when we look at MVRs, you need to be running them. And there's one of the old rule of thumb used to be no more than 2 speeding tickets or 2 accidents in 2 years or 3 in 3 years. Now, the problem with that is you can see a trend. And if you still had that, a plaintiff attorney or a good plaintiff attorney would come in and poke holes in that. So here is a scenario. You have a driver that gets pulled over in January of 2021 for 20 miles over the speed limit. And then he doesn't get pulled over again until, say, March of 2022 for 20 miles over the speed limit. And then in 2023, gets pulled over again in June for 20 miles over the speed limit. When you do that 2 in 2 years or 3 in 3 years, he's still within that acceptable criteria. But was there a trend there?
Absolutely.
There's a trend. And then at that point, if the employer doesn't take actions by trying to show that they're counseling the employee, trying to do driver behavior modifications and things like that, then they move that and try to make that negligent entrustment, negligent retention, negligent supervision. And when you get attorneys that can kind of prove those 3, that's kind of a home run for them. And that's usually a huge jury verdict.
So one of the things that I'm hoping that you guys will listen to from this little talk Jim and I are having is this. Guys, have you ever wondered how a automobile commercial vehicle policy pays out $20 million or $30 million or $40 million when the commercial auto policy only has a $2 million limit?
Right.
Well, that's how they do it, guys. They pierce the corporate veil. They show negligent patterns. They show negligent entrustment and all these other negligence. And then negligence can get trouble damages. So you can pay 3 times the value. So it can get really, really expensive. So what do you do, guys? So here's the deal.
So to add on that is if you have a commercial umbrella policy, if the most commercial umbrella policies, I'm getting a little bit into the weeds here, but when you look at a commercial umbrella policy, usually it's a follow through. So if you've pierced your general liability policy or your garage keeper's legal, then that extra money is sitting on top. So if you have a $1 million umbrella or a $5 million umbrella, that's where some of that extra money is coming from because it's a pass through policy.
Okay, so guys, here's the deal. When you guys are buying insurance and you get to the point where you're now hiring people, I want you to look at it from this perspective. Are the few dollars that you save in premium worth everything you've worked for your entire life? Your future, your business, your kids' education, your vacations, everything is on the line, all because you tried to outsmart the system. You tried to game the system. So let me tell you what you're supposed to do, because Service Trucks USA, we're here to help you guys make great decisions, right? So here's one of the things you got to do. Not only do you have to run the MVR, but you have to do spot audits of your service trucks. Unannounced spot audit, video them. That's even better because then you have evidence, but you have to document it and you put it in the employee's file. And you walk in with your shop foreman and you go through the entire truck. You do a walk around on the truck. What you're looking for are areas of obvious exposure to the company. Are there things in the back of the truck that don't belong? Are there hazardous chemicals not secured properly? Are there all kinds of things that your guys are doing on a regular basis that you may not be aware of, but it's your duty and responsibility to check those things. And then you got to take them to the scale.
All right. And let me add to that is, anytime you're dealing with, say, DOT, OSHA, or any other regulatory agency, you're guilty until you can prove your innocence. And the only way to prove your innocence is having the documentation. So it's imperative that when you're doing these, you document it, digitally scan it in, or have it. So in the event of an accident, knock on wood that it doesn't happen, that you can prove that you're trying to put the safest vehicles out on the road.
And that's the key. It's not so much that you're trying to throw your employee under the bus, but he's not going to have a job if you're out of business. So you have to recognize what's happening out there in this highly litigious society that we live in, and you've got to do your part. It doesn't take that much time. You just say, okay, Johnny, meet me at so-and-so. You're going to meet at the truck stop. You're going to document the vehicle. And then you have to write him up or her up for the deficiencies. And you have to put it in the file, and they acknowledge it. And you have to put the whole corrective action policy in there. And now you actually have a pot to pee in. You got something that can maybe protect you from a horrendous claim, because accidents are going to happen. Just like me crashing a U-Haul truck. I drove it 310 miles and it was at its final destination when I crashed it. So accidents do happen, but it's your responsibility to protect it. Okay, let's cover another area of insurance. Okay. When you can't work because of not having access to a machine. Okay, so let me ask you a question. So my service truck broke down and it's at the shop through no fault of my own, and my truck was making me $2,000 a day. Is there any insurance that'll protect me for that?
Well, yeah, if you have a policy that's in place that will cover what they call business interruption insurance, and that will help you with that. There's usually a time element with, so let's use his example. So let's go back to 2017 when Hurricane Harvey came into Texas and sat over the state of Texas for 5 days and dumped 50 plus inches of rain in Houston. You had a service truck that was sitting there and it flooded out. Not through any fault of your own. Well, now you can't use that truck until it's serviced or you get a replacement. So there could have been coverage if, one, it was a covered peril. And usually on a commercial auto policy, it would have been. But then you have the business interruption aspect of it. Was that on the commercial auto policy? Was it on a business personal property policy and things like that, or in the marine policy? And then there's usually what they call a time element. So on your auto, you have a deductible. Sometimes it's $1,000, sometimes it may be $500, $250, maybe it's $10,000. But under a business interruption policy, usually it's a time element, so the vehicle has to be, or a piece of equipment can't be used for at least 72 hours. Then at that point, that's when it starts kicking in, and at that point, you have to prove, and this is where having the good records, maintaining good, documents saying, hey, this vehicle's out, it's making me $2,000 a day. You have to have proof, usually going back about 12 months, worth of data, so they can prove up what it would have been. And then they talk about what's called a period of restoration. How long is it going to be before you actually get back up and running? So if you have a service truck that potentially has a specialized piece of equipment, and that specialized piece of equipment comes in, say, from overseas, how long is it going to take to get here?
Now, one of the things that you guys should be aware of is sometimes the insurance company has the potential for a risk that's pretty horrendous. And so sometimes they'll go out and rent you a piece of equipment to replace it, because they would rather fork out 30 grand or 40 grand than fork out $250,000.
Right.
So it's like having a big brother or big sister looking out for you, trying to advocate for you to get you back in business. So what's that coverage called again?
So that's business interruption.
Okay, so you guys got that? So write that down, pause the tape. It's called business interruption insurance, right. And that's the conversation you want to have with your agent. Now,
so there's also another thing kind of alluding to what you were just talking about. So there's called extra expense also to continue your operations. Now, if you have, say, a building that gets damaged and you can't do this, and you sit there and say, okay, hey, we're going to temporarily rent another shop so we can perform business. There's extra expense. And if you have that coverage for that, it'll pick up those extra expense, because the insurance company would much rather pay maybe a 2 or 3 month lease, temporary lease over here, to avoid the additional $250,000 in lost income.
Okay, here's another one. Okay, I told you, got some badass friends, boys. So check this out. Listen to this one. Okay, here's another area. How about somebody defrauds you? Somebody theoretically could write you a bad check, or they commit fraud against you. Is there coverage to protect you?
So what's funny is, during COVID, cyber type crimes went up significantly. And I'm going to use an example that's not really truck related, but we had a client that received an email from one of their clients, and they said, hey, due to COVID, we are no longer accepting paper checks. Can you please, excuse me, can you please wire money to this account? Well, the person never verified that it was, they took a quick look at the email address. It was spoofed, and there was one letter difference in the email, and they wired $86,000 to this organization.
Did they get indemnification? Did they get their money back?
It was a covered claim, but a lot of times now, because of that increase during COVID, there's special stipulations under a crime policy or a social engineering scam. We all received that email from that Saudi prince that promised us $11 million.
Mine was Nigerian, dude.
Oh, okay. All right. Nigerian. But that's the case on that. So when you're doing those, you want to make sure that you train your bookkeeping staff to do what they call a callback provision. So they don't respond to that email. They pick up the phone and they call the person who maybe you had to, send money to, because at that point, and if they verify saying, hey, this was not me, then it's a falsification. Cyber crimes are on the increase, and it is just amazing to see what is transpiring in this environment right now. We had one happened 2020, Christmas Day. I decided, it was like, it's Christmas weekend. I'm not going to bring my computer home. So I get the telephone call Christmas Day. My wife looks at me and goes, let me guess, you're going to the office. I said, yep. So it was an organization that somebody had basically a USB they had plugged in for a training presentation at this organization, and it installed malware that activated on Christmas Day.
Now, we didn't talk about that, but what type of coverage? I know there's a policy specifically for cyber type issues.
Right.
What's that one called?
It's a cyber policy.
Cyber policy. Okay.
So, here's the other issue. Are you taking electronic payments? Are you keeping, customers' credit card information? How are they paying you? Are you taking electronic payments? So, I'm not trying to say, hey, you got to buy all this coverage. I'm just wanting to make you aware that there is some vulnerabilities there. And if you have it, I had some plumbers do some work, and they actually have a tablet that comes out, and, they did put the work order in. I signed it. They scanned my credit card and everything. But if somebody loses that tablet, that's considered a breach, and that requires notification to the clients if the information is stored on that tablet.
Okay, so let's cover that again. We've all received emails from so-and-so that said the system was breached. Most of us ignore it until you find that it's your information that's out there on the street. Right?
That's correct.
And that is a liability. So again, what are you doing to protect customers' data? Okay, and that means identifiable information of the customer. You could have the guy's address, you could have his driver's license, you could have his telephone number. There's all kinds of data that you have a duty and obligation to protect. Now, I know this is a whole bunch of stuff that we're covering right now, and we're never going to cover what Jim and I know, in the course of this podcast. But my goal is for you guys to at least have an intelligent conversation with your agent, with your broker, so that you know exactly. Now, here's the one that's near and dear to the guy's heart, okay? This is the one where guys can really get themselves in trouble. my guys that are part of this community, it's not uncommon for them to have $100,000 worth of tools. It's not uncommon. They really love tools, okay? Now, you mentioned something called inland marine, which happens to be the dumbest name I ever heard in my entire life. But it's called inland marine. Jim, what covers the tools that belong to the mechanic on a company-owned truck?
So here, it can be covered under a couple of different. You heard me talk about business personal property. A lot of times that will be a sublimit under a property policy that may cover tools off premise. And usually when I talk about a sublimit, so say your building's insured for $200,000, they may give you 10, 20% as a sublimit for business personal property or a stated value. So that aspect. Now, going back to the inland marine, it goes back to the 1800s when they actually used to transport cargo overseas. And then once it got to the United States, that's when it was equipment that was in motion. And that's where that name kind of inland marine came from. Useless trivia knowledge for the day. So, and I am not a salesperson. I want you to know that. But with this being said, that's where the coverage could be for some of your specialized equipment, your a lot of times like business personal property may be your tools that are under $5,000 in cost. But if you have a big Lincoln welder on the back, it may cost you, 3, 10, 15 grand, depending on size, a Tommy lift on the back, and some other compressors and things like that. Sometimes you may actually have to schedule that, or you would actually have to have an inland marine policy to cover that.
Okay, so I'm gonna insert my 2 cents now so that you guys can understand this. Again, another area to take notes. Okay, we threw out a couple terms. One's called scheduled and one's called unscheduled. So unscheduled property is blanket coverage that is a sub of a bigger number. So it could be the property coverage on the building, and then they assign percentages for unscheduled items. So you're not insuring a particular item, you're just covering a blanket of items, but at the time of the loss, you have to provide enough data to demonstrate A, you had that piece of equipment, and B, what its value was.
That is correct.
Okay. Now, they generally don't subtract depreciation from those claims. Am I correct on that?
For the most part, like just regular tools, no. If you have a mechanized piece of equipment, there might be a little bit of depreciation. And again, there's no specific answer because every insurance policy is different. Here, and I'm not trying to sell a hub, but we have claims advocates. So when a claim occurs to one of our clients, we have advocates to kind of help them manage through that process. When a client is experiencing some difficulties and some pain points, unfortunately, like when I first started my career, the average claims adjuster, handled probably 100 to 125 claims, and that was because they were working with paper files. With the onset of computers and digital media and everything now, I was speaking to a claims adjuster at a well-known insurance company, and a auto adjuster will handle in the upwards of 400 claims.
Wow, that's crazy. Now, why is this important and why should you guys be paying attention to this? Is because knowing how your policy works in advance will save you a lot of time, a lot of grief, and a lot of aggravation.
Right.
So it's really, I can't stress enough how important this topic is. That's why it took me this long to find somebody that I was confident in that could convey this information to you guys. Now, here's how it works. The simplest and easiest way for you to document something prior to a loss is video. Just get your phone out and you pick up the tool, you have a helper, you describe it, you call out the serial number, you can say when you bought it, you can put the price of the item, you can record all that, And you don't have to necessarily write it all down, because when it disappears, when the claim happens, you're going to want to know.
Right.
And then you can recover it because you have the data. Trying to remember this stuff after the loss is virtually impossible. And through my experience, the average claimant only gets 30 to 40% of what they would have been entitled to, because they literally can't remember what exactly they lost. So it goes to extremes. They either lie and they create a fraudulent adversarial relationship,
Right.
or they underreport. They just don't tell the adjuster exactly the correct information, and either one's bad.
Right. So over-reporting, that's fraudulent. When you look at an insurance company, their duty is to indemnify you back to 100% minus your deductible. So let's say you have a $100,000 claim, you have a $10,000 deductible. They're responsible for indemnifying you up to $90,000. So, to add on to what, KJ was talking about is, hey, you have your service trucks. You probably have a standard of what tools go on those trucks. So, itemize just one, hey, this is our standardized list, and then open up all the compartments, videotape it. There's your proof right there that you had that list. And then if you had to replace that, when you talk about wrenches and sockets, and if it's Snap-on or if it's, one of the others, what you paid for that tool, 15 years ago and what it would cost to replace it now is significantly different. So, it's like kind, and quality, replacement cost. So that is the key on that. But again, having the documentation is key to moving the claim along very, very well and expeditiously.
Okay, so now we're going to go to scheduled items. So this is another category. This happens to be my favorite area because it's so much easier for these claims to get processed, okay? So a scheduled item on a policy is literally you're presenting the data to the underwriter and you say, I present this item. I think it's valued at $20,000. Do you concur? And will you protect me at the time of a loss for these scheduled types of claims? Theft, fire, upset, all these different categories. Those are scheduled items. Okay? There are some categories of tools that you guys have that should be scheduled.
Right.
Because they're so critical in nature to your business that you need to let the adjuster know up front what they're insuring, because it's going to make it so much easier for you at the time of a loss. Items that you should consider scheduling are welders.
Right.
Multiple function all-in-one units, because they can be stolen and removed. Technically cranes, because you have never seen a bigger cluster at the time of the loss than trying to tell some adjuster that contraption on the back of your truck is worth more than he thinks the whole truck is worth.
Right.
Okay. So these are items that you should absolutely schedule. Have the conversation with your agent, take this podcast, write down your notes, and have an informed conversation with your agent.
Right. And then when you're talking about like specialized pieces of equipment, unfortunately, when the economy gets bad, thefts go up. And we have seen, and I'm going back to like 2008 when the housing market kind of burst. There was equipment that was, bobcats, backhoes that were basically being stolen off of job sites at construction sites and things like that. So if it was, say, a 1995, John Deere backhoe, basically the insurance company is responsible for getting you another 1995 John Deere backhoe, like similar quality. That's kind of that replacement cost. Now, this is where having an advocate help you, because a lot of times they're going to sit there and they're going to do a search, and they're going to sit there, and during this time, during that economy crunch, they were pulling up backhoes in areas that were really economically depressed, and they're saying, hey, this is only worth $17,000. And I'm like, that's Las Vegas. And I said, we're in Texas, so you need to quote something here or include the transportation cost to get that piece of equipment here if it's like, kind, and quality. So again, having somebody, your agent or a licensed adjuster that help you manage through some of these is critical and, making sure that you get everything you deserve when you buy that insurance policy.
Now, if enough of you subscribe and tell me awesome things about this podcast, I might be able to persuade Jim to come back, because we got a lot more areas of insurance that we're going to cover. But the area that I'm going to wrap up today's podcast about is workman's compensation. Okay. Now, my understanding of workman's compensation, it's required under federal law, and it's designed to protect the employee from sometimes unscrupulous acts by the employer, but it's also designed to kind of level the playing field. So the way that workman's compensation works is they have what are called mutuals and non-mutuals. So the mutuals are shared risk. Mm-hmm. And what happens is a bunch of like companies all join together. They contract with an insurance agency, and the insurance agency says, okay, well, based upon this risk profile, we think we can, if you guys will work together and be smart, we think we can charge you this premium. And if you guys perform well and you keep the claims at a minimum, we will share some of that premium. We'll rebate that money back to you.
Right.
Okay. That's typically how many workman's comp policies. During the course of the policies period, they keep track of claims. Mm-hmm. And that claim is called a loss ratio, right? Or loss run. Loss run. So they have what's called a loss run. Now, for everybody to benefit, the overall group needs to perform pretty well, but individual people within the group can also have an excessive claim. Now, they don't necessarily kick you out, because that's why insurance is there, but they're going to provide a numerical representation of that claim.
Right.
And that affects your participation in the dividend, the money that gets paid out.
That is correct.
And it determines whether they're going to welcome you back to the club again.
That is correct.
Yeah, I did good on that, didn't I?
Yeah. What's interesting is the mutual companies, basically the policyholders own the insurance company per se, oversimplification. So if the insurance company is profitable, they share in the profits back to the policyholder. But then you almost kind of gave a scenario of what they call a captive insurance. So a captive insurance is where a group of people come together, and it's kind of economy of scale. What they're doing is they're creating this captive organization that's buying and has greater buying power. And then those are uber critical, because when one person screws up, it affects everybody else. So you've got your standard insurance companies, you've got your mutual companies, and then you have your captives, which, if you're very risk adverse, you're running a great, shop and you put all your controls in place, then, a mutual insurance company or maybe being able to get into a captive are two really good options, because hypothetically, say your workers' comp premium's $10,000 and you didn't have any losses. Someone like, and I'm going to use Texas Mutual because they're the largest writer in Texas, and they are a mutual company. If you're in their program and you're in there for at least 18 months, you do get a dividend back from them, which is kind of like money in the bank for that.
Okay, so why this is so critical is that this area of insurance is not negotiable. You must have it in order to operate your business.
So what's interesting, it is federally mandated, but the state of Texas is the only state that does not have mandatory workers' comp.
No way.
The only state that does not have mandatory workers' comp.
Okay. Well, that's either good or bad news, depending on whether you're from Texas or not from Texas. Okay. Just remember, if it's not mandated, doesn't mean you shouldn't have it.
Right.
Because otherwise, you're the insurance company.
Yeah. So workers' comp basically in most states becomes the exclusive remedy. So if an employee gets injured, even though they did something stupid or did something they weren't supposed to do, it protects the employer. So what that means is the medical bills, the lost time payments for lost wages is paid by the insurance company. Otherwise, that employee, if you don't have workers' comp, the exclusive remedy goes away, and then they can sue you under that. And you're sitting there thinking, well, I've got a commercial general liability policy. Well, workers' comp is excluded under a GL policy.
So everybody hear that? Pay attention, okay? Because I'm giving you some good stuff here. This is the why you're listening to this podcast. Workman's comp for all of us in Texas is not mandatory, but you become the insurance company and it's not covered under your general liability policy. Moral of the story, you probably should go ahead and get a workman's compensation policy.
Yeah, and not to add doom and gloom, but we are now May, and I've also assisted 4 different clients that have had fatalities in the workplace. 2 of them were related to a motor vehicle accident. One was an equipment failure, and then the other one was an accident where somebody got hit by some equipment that fell over as well. So, with that, if they didn't have workers' comp, the family members are going to be looking at the employer saying, who's going to pay for the burial of my family member? How am I going to replace their lost wages? They were the main breadwinner in this. So these are all things that kind of help. And this is for this year.
Okay, so I've also been involved in some horrific accidents involving fatalities since I've been doing this for a living. And so it's horrible. But here's what I'm trying to get across to you guys, okay? Here's some areas that you guys need to be paying attention to. Do you have a drinker on your staff? Do you have a toker on your staff? Are you aware of it? Do you know that it's happening? Do you know that every day at 4:30 or 6:30, they're at the local bar and they're drinking and they're bragging about getting effed up that night and all that kind of stuff? Are you hearing that stuff? Do you know? Come on, guys, pay attention. Are you willing to put your entire livelihood at risk because you don't want to offend somebody, or he's a good hand and he's a great mechanic? Come on, get real.
So let me add a little anecdote story here for that one. So company here in San Antonio has employees. They provide them a company vehicle. 2 brothers worked together. They lived in a town just outside of San Antonio. And after work on a Friday, they stopped at a bar to get something to drink. And there's a girl at the end of the bar that smiles at one of them. They didn't know which one it was. It turned into an argument. They get into a fight in the parking lot. One of them knocks the other one over, jumps into the company-owned vehicle, runs the employee over, throws him in the back of the pickup truck, and leaves him on the railroad tracks.
What?
Yeah, what?
Jeez.
So these are the things that you have to be very, very careful. So if you allow, and this is where I'm going with this, because again, I'm thinking risk all the time, is if you have an employee that's taking a service truck home, remember that they're driving that vehicle. Do you have a personal use policy? Is it not allowed to sit in front of a bar and things like that? Because that is your company image on the outside of that vehicle. And you can, so even though they may drive it, say, Monday through Friday, 8 to 5, whenever that vehicle's in motion, that's your company image. And you can't emphasize that enough with your employees, that can be very detrimental to your organization.
So what should you do to mitigate risk? Well, many of you have GPS on these vehicles, but are you looking at the data? Is there a pattern? Because see, this is what's going to happen. At the time of the loss, they're going to subpoena all this data, and they're going to look at it, and they're going to see that Bubba and Tyrone and Jose have a habit of speeding. And you had the data, and you didn't reprimand them, you didn't write them up, you didn't do diddly squat. So guess what? You just created that negligent entrustment concept again. So you got to be careful. Look, our goal today is not to terrify you.
Right.
Our goal today is to inform you so that you can have an intelligent conversation with your agent. Let the dang on agent earn their commission. Stop just looking at the price and signing and going about your business. Ask questions. Here's my last piece of advice on this topic. If you're married, bring your wife to that conversation. I'm not even joking, dude, because she's probably going to ask 1,000 better questions. By their nature, they're more inquisitive and they're less trusting. So if you're not sure, bring your wife to that meeting with the agent. Take these notes. Send us something on at Service Trucks USA or one of our forums and open up a dialogue. And, sometimes I got nothing else better to do than go look up stuff for you, or I'll call one of my buddies and we'll see if we can help get your point in the right direction. Okay. So I think we're going to cover it because I think we've talked quite a bit today, and hopefully we get a great response from this podcast. And if we get a great response, I might be able to persuade Jim, because he said he could take me fishing or hang out with me or something. So we may be able to do this again and go into some other areas of insurance. But hopefully today you guys recognize how important this topic is, okay? And hopefully you got some information that you aren't getting someplace else, because that's our goal, is to take care of you guys, our members. Jim, before I let you go, can you kind of throw in a little infomercial about Hub International and what you guys, how you might be able to help these guys in the future? Not you personally, because I know you're not a salesman, but what can Hub International do for these guys?
So like I mentioned in the opening statement, one, it's been KJ, thank you. It's been an honor to be invited to speak to everybody. We are the 5th largest broker in the world. There's not an insurance company that we can't get to. We have people that specialize in certain segments of business. So we have a transportation vertical that specializes in nothing but transportation type industries, which kind of falls right into your niche. But, there's social services, education, nonprofits, there is construction. They bring subject matter experts to help clients manage their risk. It's not only about placing an insurance company. It's like, what else do you get after the fact? Because when you look at an insurance policy, it's a piece of paper. But what other services are you getting after the fact? Do you have claims advocacy? Do you have questions you can talk to people about risk mitigation? And I'm going to throw back another interesting, tidbit about Texas. In the state of Texas, you can pull an MBR and it'll say clear, but if you don't look at it closely, it'll say suspended, and there's no moving violations, no accidents on that record, but it was suspended because the person didn't make child support payments.
Wow.
So educating people on what they should be looking for in MBRs. I mean, what here in our office, we do monthly webinars that there's no cost to attend. The last one we talked about was actually MBRs, because they are becoming so critical. We're doing a workers' comp 101 class in person. So these are the things. So when you're buying an insurance policy from broker A and broker B, what are you getting for that? Are you just getting the insurance policy, or are you bringing subject matter experts in to assist? Because Hub's, value proposition is to help clients identify potential loss sources, quantify why things need to be done, so we can protect what matters to you guys most: your people, your property, and your profitability.
Well, that pretty much sums it up, guys. Listen, Service Trucks USA is a community. We built this organization to help each other, to help you guys learn, help you remain profitable, entertain you occasionally, educate you when we can, motivate you when you need encouragement to keep going and to keep fighting. We care about you. I care about you. And I told you, dudes, I got some badass friends. So tell your buddies to subscribe to our channel, to subscribe to the podcast, so we can continue to deliver this quality content to you guys on a regular basis. Jim?
Thank you, brother.
You the man, bro. Thank you. Hey, peace out.
Peace out.
Subscribe right now to Service Trucks USA on your favorite platform so you'll never miss an episode. And don't forget to follow us on Facebook at Service Trucks USA. That's Service TRUX USA, where you'll get even more great content, discussions, and resources related to vocational service trucks. I look forward to getting to know each of you better. Until then, keep your fingers dirty and your nose clean. This is your guy, your man, your dude, KJ, signing off.